All right, welcome back. So let me tell you all about a stock that I believe is a bit of a sleeping giant. Okay, we're talking about Accenture. Now, off the top, okay, by the way, that ticker symbol is ACN. Now, listen, off the top, okay, this is not a company that has the mass appeal of a McDonald's or Home Depot stock, right? Because this company does not have a product that they sell. Again, I repeat, this company does not have a product that they sell. This is actually a consulting firm. So some of you may be asking, well, what exactly is a consulting firm? There's no shame in not knowing. We're all here to soak up the information, right? So a consulting firm, simply put, is exactly what the name suggests. It's a business that lends its knowledge, its experience, its business acumen out to other companies in order to boost sales, increase their appeal to the public, right? So, for example, let's take a company like Aldi, okay? I love Aldi. If you don't know what Aldi is, you gotta get out of that dark cave that you've been in, okay? And connect with the world, all right? So anyway, let's take Aldi, okay? Aldi is a grocery store chain that is pretty well known. I believe they're in something like 38 different states currently, right? But let's use them as an example. Let's say they may be looking to expand or grow their business. Maybe they want to reach, instead of 38 states, maybe they want to reach 45 states, right? So they're looking for a way to expand and grow their business and increase their margins, but may not necessarily know how to go about it or how to optimize that growth process. So what a growing brand like Aldi will do is that they will outsource marketing strategies and bring in the people that have done it before on an even greater level or bigger scale. So they'll be seeking the experience and the business savvy of people who have worked with other successful companies to consult with on how to achieve those goals. And it's actually something that happens quite frequently, right? It's actually something that happens quite frequently in the world of business. And it's a very smart way to grow your business, one, right? And pay someone else to do it for you so that you don't have to do it yourself. One thing about it, okay, that you got to respect is that if a company that understands when they need to bring in more knowledgeable people that are more knowledgeable than themselves. There's an old proverb that I believe derived from something Socrates said. He's been quoted saying anyway. And it goes, the wise man knows he knows nothing. The fool thinks he knows all. And that's how I like to approach life, period. But with business in mind, especially with an understanding that there is always room to grow, I need a company to be able to make that decision. I love investing in a company that knows when to make the decision to go out and get outside source knowledge. Always room for more knowledge and to better yourself. So when a company is able to recognize that they might need to go outside of their own employees to recruit people who are better suited for the job than them, that's a great indication of their awareness and smart leadership. So I said all that, okay? Huge word salad. Said all that to say that this is what Accenture is all about. Outsourcing their skills with an emphasis on technology. Companies hire them to make their business better, period. And it's proven to be a very, very lucrative and profitable business for them. So whenever I'm researching a company, okay, one of the first things that I want to know is where they are in their field, meaning where do they rank among their competition, right? We all know McDonald's is what? Number one, right? As far as fast food industry goes. So I like to do that with everything that I look up. So I looked up the top consulting firms in the United States, and Accenture wasn't number one. Aww. Or it wasn't number two for that matter.
What?
In fact, they are currently number 4 of the top 5 consulting firms in the U.S. Now, don't quote me on this, okay, because I found out while doing my research that there's another company considered to be number 4 by revenue margins, and it's a company called KPMG, right? I've read a lot of articles, so there seems to be mixed opinions on the numbering, but whatever, semantics, right? Doesn't matter. So you might be asking yourself then, well, why in the hell would you want to invest in the 4th or 5th most best company? And the answer is really simple. Okay. It turns out that most consulting firms are private. That private, which means they are not publicly traded. You cannot trade their stock. And this is the case for the top three consulting firms on the list. So by default, that's how I arrived at taking a look at a company like Accenture. This company has been featured in Forbes as one of the top consulting firms in the world, let alone the US. So let's get into why I'm picking this stock. And let me say that I've seen a lot of income statements and balance sheets. And this is probably by far they have one of the most beautiful finance reports that I've ever seen. Okay, a lot of green. But let's get into it. So Accenture currently right now is priced at $300. Again, this is a company that does not sell a product, y'all. They are the product. But when you go and click on their financials, I mean, you look at the dividend growth. If you look at their margins, if you look at their shares change, right, their outstanding shares, their revenue growth year over year is impeccable, right? If you want to go to the balance sheet or the cash flow statement, either or, you go down and look at their free cash flow. They're swimming in free cash flow. They're swimming in free cash flow. So that is not a problem. So I want to know, the purpose of looking at the cash flow and why it's the king, why people say the cash flow is king, is because free cash flow is king. Because you want to know if they're able to continue to pay that dividend on a consistent basis. So speaking of, let's go over to their dividends, okay? Now, they have an annual dividend of $5.16 per share with a forward yield of 1.70%. So 1.7%. And if you go down here, you can see the list that they've been increasing. Now, they did take a dip back in 2019, 2020. But we all know what happened in 2019, 2020. The pandemic, right? So a lot of businesses took a dip during that time. And rightfully so. If you're a consulting firm and businesses are trying to figure out or businesses are going to a time and period where they're trying to shed money and they're trying to shed finances and shed costs, there are not going to be too many businesses that are looking to look you up for consulting, right? This is not the time to consult. This is the time to mitigate our damage. However, it did not destroy this company. It did not destroy this company. They're still around. They were still strong. Even if you go back to the 2019, 2020, they still were paying a dividend share of 80 cents per share, right? And then over the time, of course, since then, up till now, they've increased that dividend back up to a respectable number. So let's go over to the forecast and see what the analysts are saying. So out of 21 analysts with a 12-month price forecast for Accenture, their average target is $350. Mind you, this stock right now is at $303. They're saying an average target for this is $350 with a low estimate of $275 and a high of $445, y'all. Now, mind you, again, these analysts are just like you and I. They're nothing special. Anybody can look at something and come up with their own opinion on it, right? However, I do want to give you the data that they're saying that this right now, this company, they consider it a buy, right? So after looking over all the data, right, I obviously wanted to know how consulting firms performed during a down market, or more accurately, how they performed during a recession, since that's the entire point of building out a portfolio with stocks that you trust, right? And what I found out is that consulting firms actually have the potential to do well in both climates, both a down market and a thriving market. Because what happens in a recession is that though a consulting firm may experience loss just like any other business, on the flip side, they may also experience an increase in outsourcing from companies that need their experience in helping their business retain revenue and decrease operating expenses. So my point here is that there's room for a consulting firm as big as Accenture with a great reputation to flourish during some of the most difficult times in our economy. Is their dividend anything to write home about at 1.7%? Not particularly. But what I'm not getting in dividends, I'm hopefully getting in stock price appreciation and asset stability with an emphasis on recession resilience. But look, I hope that this huge word salad was somewhat useful to you in some type of way. If it was, then do please bless the algorithm with a like on the way out the door. And share this with a friend you care about. And I'll see you all in the next one. And remember, listen, to invest responsibly. I'll see y'all later.